On Business Incorporated today. FAO announces $11 million to develop new policy economic modeling tools in Africa. In South Africa's green transition to cost over $64 billion by 2030. Kenya considers scrapping $1 billion Eurobond plan on global yields. Hello and welcome to the program. I'm Will Ibong. Let's start the show as usual with market numbers at intraday in major markets in Africa. Its sentiment, South Africa, however, is among the top gainers, almost 1% up, while Nigeria's index trails from afar with 0.02% gain. On the flip side, EGX 30 was the biggest mover at intraday, up 0.76%, while Kenya closed Tuesday's trading down more than 1%. In the Middle East, markets we follow were mixed. Abu Dhabi market was in the red, 0.1% down, while Dubai was in the positive region, over 0.5% up. In another region, Saudi Arabia was up over 1%, while Qatari index trailed far behind, down 1.14%. Now to Europe, where Russia-EU relations have hit a new low. Russia's energy giant Gazprom today cut off gas deliveries to Poland and Bulgaria. Chris Kober has the details on this. Now, Chris, this was quite expected, wasn't it?
Gazprom said it had halted gas supplies to Bulgaria and Poland because these two countries were failing to pay for these deliveries in rubles. Now, this is the Kremlin's toughest response yet to sanctions imposed by the West over the conflict in Ukraine, which started on February 24th. Now, we have to keep in mind that Poland and Bulgaria are not only EU members, but also member nations of the Western military alliance NATO. And it is a dispute coming to a head here in which both sides are not willing to give way. Russia's leader, Vladimir Putin, has demanded that countries he terms unfriendly agree to a scheme under which they would open accounts at Gazprom Bank and make payments for Russian gas imports in euros or dollars that would then be converted into rubles. Now, most of EU governments have been refusing to follow this demand, claiming contracts between energy companies have set payments in euros or dollars, and these contracts are to be fulfilled. Hungary is the only notable exception so far. The government of Viktor Orban has been claiming they don't mind paying for gas in rubles, pointing towards energy security being more important. Now, around 60% of EU energy imports are paid in euros and the rest in dollars, and Putin's demand was apparently intended to help bolster the Russian currency against Western sanctions.
So, Chris, what has reactions been like since we had the news today, this morning?
There has been widespread condemnation of the move, as this is a scenario becoming a reality that the European Union has been fearing and honestly, up until recently, hasn't been daring to expect. Europe is highly dependent on Russian energy, and in the past, the opinion had been prevailing among EU leaders that oil and gas deliveries would continue even as Russia and the bloc had been clashing politically over various subjects. Now, this narrative is now a certain thing of the past. Bulgaria's prime minister said EU Commissioner Ursula von der Leyen assured him that Gazprom's move would be a problem of all of the EU and would have a common response. Bulgaria is almost completely reliant on Russian gas imports. It has held talks to import liquefied natural gas through neighboring Turkey and Greece. And Bulgaria, once one of Moscow's closest allies, has cut many ties with Russia after a new liberal government took the reins last fall and also in the wake of the invasion of Ukraine. Poland has long had a much more critical stance towards Moscow. Its state gas company bought about 53% of its gas imports from Gazprom in the first quarter of this year, but Warsaw says it can get gas from other sources. Now, as the West had been united against Russia's invasion of Ukraine, Kiev is accusing Russia now of blackmailing Europe over energy in an attempt to break its allies as the fighting in Ukraine enters a third month.
Okay, so as we're looking at that, we'll still look at the markets. And what are the financial markets making of this latest escalation between Moscow and the EU?
The move is certainly showing an impact on commodities markets. European gas prices have spiked by as much as 24% following Gazprom's statement that it was suspending deliveries to Poland and Bulgaria. Now, the spike comes even as the weather turns warmer in Europe, lessening the demand for natural gas for heating homes and businesses. Nevertheless, the news of Russia using energy as a weapon here has again been highlighting Germany's questionable dependence on energy deliveries from Russia and how severe an impact it would have if Moscow were to turn off the taps or if the EU were to agree on a complete energy boycott. Now, all these issues are on investors' minds this morning and weighing on German stocks, the DAX losing around 1% in early trading.
Thanks so much, Chris, for that update. Thank you for coming on the program. Now to the UK, where there have been some government reactions to the Twitter takeover. This story is still buzzing. Juliana is here with the details. Hi, Juliana.
Good afternoon, Will.
So the UK says Elon Musk must comply with new content rules or face sanctions. I'm sure that's not the welcome party Elon was expecting, was it?
Absolutely, you're right. It's not the welcome party. And I think it's fair to say that since confirmation has come through that the billionaire entrepreneur will be taking over the social media platform, it's gone from excitement to a little bit of fear. And we witnessed that overnight, didn't we, in Wall Street, considering that $128 billion has been wiped off what was once the most lucrative company in the world, Tesla, because investors are anxious about exactly what Elon Musk is going to do to purchase Twitter. Where is he going to raise that $44 billion? Also, as well, Twitter's share price sank about 3.5%. And now, as you quite rightly said, the British government and campaigners in Britain have intervened because Elon Musk is kind of describing himself as a freedom of speech absolutionist. And I think initially people were really excited about that because there were some concerns about the type of power that Twitter wanted to have amongst people that weren't quote unquote woke. I think the most famous case, of course, is former President Donald Trump's Twitter account being deactivated. But now, of course, we know in the UK, the British government have really trying to been tackling down on online safety for children. And of course, if Elon Musk does decide to go down this freedom of speech absolutionist, meaning anything and everything can be shared on the platform, how are children's safety going to be upheld? So that's the reason why Damian Collins, who's an MP who chairs the Joint Committee on Online Safety, is asking, how is Elon Musk going to do that? We still have to wait and see. We know the deal hasn't been sealed, signed and delivered just yet. But yes, the kind of frenzy highs and the excitement has certainly come to more about anxiety and fear of just how much Elon Musk is prepared to do.
Yes, Juliana, we're still waiting to know what next with Twitter. Well, that will come up, in the coming days. We will see that unfold. Now, over to P&O. We see that P&O Ferry has made its first channel crossing since the sackings last month. Can you tell us the nature of this renewed operations?
Yes, well, it's still fraught, but yesterday, you're absolutely right, the first channel crossing took place between Dover and Calais, but this was only freight, not passengers. We don't expect passengers to be able to set sail for at least another week or so, but of course, it's still shrouded with controversy because just a few hours earlier, there was a distress call from a P&O ferry vessel that was travelling within the Irish Sea. It lost power, it didn't couldn't get to shore, and three rescue boats had to go and pull it back into the port. And of course, this is highly embarrassing for the embattled firm because just a few weeks ago, they unceremoniously sacked their entire 800 force staff. And of course, these were really well-experienced British seafarers, and they've all been replaced with contractors on much less money. But unfortunately, they haven't been able to complete the job. We know that several P&O ferry vessels have been detained by the British government because they were deemed not fit to sail. So are they going to be prepared for when passengers do start onboarding this channel crossing to Calais? We're not yet sure. This has still come up in the House of Commons. The Transport Secretary, Grant Shapps, still believes that the C&O, Pete Hebblethwaite, should be fired. There's a huge spat currently ongoing between the two gentlemen, particularly after the CEO of P&O Ferries admitted in front of MPs that they did break the law by not giving notice to the 800 seafarers who were sacked. So we'll just have to wait and see how this goes on. But yes, the freight has been delivered, but there is still lots of issues surrounding P&O Ferries. And on top of that, they are being asked to hand back the £11 million they took from British taxpayers to pay their furloughed staff. Will they pay that back? We'll just have to wait and see.
I guess we'll just have to wait and see, Juliana. Thank you so much, Juliana. Always good to have you.
Bye.
Now to Asia, where shares were mixed on Wednesday as mainland Chinese stocks bounced back after days of losses. The Shanghai Composite gained 2.49%, while the Shenzhen Component soared 4.37%. Hong Kong's Hang Seng Index rose about 0.2% as of its final hour of trading. Elsewhere, the Nikkei 225 in Japan declined 1.17%, while the Topix Index dropped 0.94%. Australian stocks closed lower with the S&P ASX 200 falling 0.78%. Australia's Consumer Price Index rose 2.1% in the first quarter, according to data from the country's Statistics Bureau. Now, in the U.S., stock futures were higher in early trade on Wednesday after the major averages continued their April sell-off amid concerns of an economic slowdown and as Wall Street considered earnings reports. Dow Jones Industrial Average futures rose 0.9%. S&P 500 futures were up 0.68%, while Nasdaq 100 futures gained 0.51%. Meanwhile, let's get a summary of yesterday's trading activity with our correspondent, Maria Bird.
The U.S. stock market took a major hit on Tuesday, having one of its lowest days since 2020. It is clear that investors are a bit concerned about inflation and a potential interest rate hike. We are also seeing major drops in the tech industry as Netflix announced a loss of 200,000 subscribers. It is clear that we may see some end to what we've seen as job market growth as well. While the Dow Jones was down by 2.4%, the S&P 500 down by 2.8%, and the Nasdaq down by close to 4%. This is lending toward what many are believing could be a recession in the global and U.S. economies.
Thank you, Maria. Next, conversation on Africa's food insecurity right around the corner. So stay with us. Welcome back. The president of the African Development Bank, Dr. Akinwumi Adesina, has warned that African countries must prepare for a global food crisis triggered by the Russia-Ukraine war. Adesina warned that the tripling cost of fertilizer, rising energy prices, and rising costs of food baskets could worsen in Africa in the coming months. Adesina has cautioned that to fend off a food crisis, Africa must rapidly expand its food production. Meanwhile, the AFDB says it plans to spend over $1.5 billion to avert food crisis. We have agri-tech expert and CEO of Uchi Capital, Terence Chambati, joining us from Kampala, Uganda, to talk to us about this. Good to have you, Terence.
Thank you very much, Will. Thank you for having me.
We've seen the Russia-Ukraine war, food disruptions, export bans, protectionist stance, including Indonesia banning palm oil exports. Now, the AFDB has warned that most African countries are at risk of a looming food crisis as a result of the Russia-Ukraine war. Now, could you paint a picture for us on how serious things could really get?
It's amazing, Will, that the whole world was not really separating themselves from what is going on in Russia, but it is actually affecting us now. Yes, lives have been lost, and we're just coming out of the COVID period, and we're looking at, as President Adesina said, actually about 30 million jobs being lost. Over and above that, we were already dealing with issues of climate change, deforestation, and all this affects the food systems. And this is how bad the situation can be. And looking at how the Russia-Ukraine war has impacted Africa and the world at large. It's not just Africa, but I think we need to look at it from a global perspective that we've all been affected by this, and we are now feeling the pinch in our pockets.
So the AFDB says it plans to spend about $1.5 billion to avert the food crisis, the looming food crisis. What do you think should be the priority areas for this spending?
I think before we go into the priority areas, Will, is just really taking a step back and looking at it from a systemic point of view. There's so many things we need to change, policies. I mean, if we look at we as Africa have got the most arable land. Ideally, we should not be importing food. We should really be driving the agenda in terms of food security across for the world, and not just feeding Africa. When we take a look at Ukraine and Russia, they have been feeding Europe. They have been looked at as the breadbasket for Europe. Actually, I think they refer to them as the granary for Europe. But from an African point of view, we should be feeding the world. And it is good that the development of all the finance world, IMF, AFDB, are really coming in and saying, how can we address the situation? But in addressing the situation, I think it's also important. Yes, there is a threat. Yes, there is a possibility of a food crisis. But how we define the problem will also shape the solution. I think we should be looking at this as an opportunity to say, how can we as Africa feed the whole world, given the opportunity, given the infrastructure we've got? What measures do we need to take for us to address the crisis which might be coming through? I think there's more opportunity for Africa as a continent for us to be able to feed the world and address issues to do with poverty and hunger alleviation. Looking at Russia, I mean, and just the Eastern Europe, they've been exporting more than 90% of the produce. I mean, you're looking at the cereals coming in, for example, in East Africa. Most of the cereals are actually coming through from Eastern Europe, Russia, and Ukraine. So we're talking of here wheat, or rice, soybeans, which we are all fighting, which we are fighting for with livestock. So this will definitely affect dairy prices. It will affect bread prices, and I think most African families will have some piece of bread on their table every morning. So wheat prices, bread prices. If we look at some staple foods, which include maize meal for mostly Southern Africa and parts of East Africa, they'll also be affected because prices have been going up. So looking at this, I think it's really important for us to say, this situation of the war in Russia, us coming out of COVID and the looming food shortage, how can we refine or redefine the question in saying, how can we take advantage of the opportunity for us to feed the world?
So you consider yourself a systems change agent. What do you think African countries can do to mitigate this? It's quite a bleak picture we have there.
So I think there's a lot of collaboration, and before we do the whole collaboration, just the systems diagnosis is important. I know we've got many developmental organizations sitting down in conferences, but we really need to get the job done. We need to get our hands dirty. We need to run these micro experiments and say, because at the end of the day, I think we need to ensure that we are dealing with livelihoods. When we start speaking of food issues and the food security, we are now dealing with life and death issues. We've got the land. We might not have the full resources, but we need to put measures in place and explore opportunities, explore resources. What opportunities can we take advantage of? What do we need? What risks do we need to mitigate to ensure that we've got enough food, first of all, for our stomachs, for our tables, and it's bringing about resources for our pockets and for the community at large. this way, we need that's financial inclusion. We are now improving our financial position as a continent because President Adesina once said that the next billionaires from Africa are going to come out of the agricultural sector. And I think most African governments have seen that and have started realizing that. But now we need the corporate world, individuals as well, to have a mindset shift for them to say, how can we deliberately start working towards financing startups within the agricultural space? We've seen earlier on that a number of fintechs have benefited. We're getting African unicorns coming out of the fintech industry. How can we start pushing up innovation within the agri-tech sector and benefiting the continent and the world at large? Because innovation comes about, it's innovation in technology is not about what the technology is doing. It's about the impact of that technology. And impact in this case is how can we improve the quality of food and the availability of food across the globe. So I think our focus on the youth, this is our greatest asset. How can we use the youth, make sure they've got the financing, we create conducive environment for them to find agriculture attractive, to get into agriculture and actually start seeing themselves as global feeders, and not just from a country perspective or a continent perspective, but really getting into it in an exciting way and saying, agriculture is something which can actually create and turn me into a billionaire. If not, let me contribute to feeding the 7 billion, which will be 9 billion by 2050.
Thank you so much, Terence. We'll watch out for that, and we'll see how these monies will be spent. Possibly you're mentioning fintech startups in the agri-tech sector. We'll hope that that would, come to fruition very soon. Thank you so much, Terence Chambati, CEO, Uchi Capital, for coming on the program.
Thank you very much, Phil.
Now, still on food security, the United Nations Food and Agriculture Organization has announced the third phase of its agricultural policy initiative in 8 West African countries. The $11 million grant seeks to develop new policy and economic modeling tools in Africa's agricultural sector. The 8 countries to benefit from the program include Nigeria, Burkina Faso, and Ghana. According to the FAO, the project will support the agricultural reform process in these countries and help them make more informed and evidence-based policy and investment decisions. The FAO emphasizes that the objective of the program is to identify priority areas for increased investment, increased transparency in markets and trade, and transform the rural world to be more inclusive with more nutritious food systems for all. South Africa's government says it will require about $64 billion to set up a green hydrogen economy in order to wean itself off coal and focus on renewables. South Africa, a coal-intensive economy, is the world's 12th biggest emitter of climate-warming gases and the biggest in Africa. The funding will also involve investments into transition fuels such as natural gas and nuclear, and imparting new skills to people who will possibly lose their jobs. Now in Kenya is considering scrapping a plan to sell Eurobonds worth $1 billion by the end of June because rising global yields will make the borrowing expensive. According to Kenya's National Treasury, there is a likelihood of not issuing Eurobonds in the current fiscal year as the international capital market conditions are unfavorable with elevated yields on traded securities. The country raised $1 billion in 12-year debt in June last year at 6.3% in an issue that was 5 times oversubscribed. And that's it on Business Incorporated today. I'm Will Ibang. Thanks for watching.